Hello, everyone, and thank you all for joining us. I'm so happy to see so many familiar faces in the audience. Thank you for joining us today. So, rising generations' ease with technology makes them confident in purchasing financial products through apps and tech companies. More than half of the millennials prefer to manage their investment through an app instead of in person. Yet, we can say that even the older generation now, probably who did not grow up with advanced technology, they're now the fastest growing demographic among fintech users. So how will the largest intergenerational wealth transfer in human history impact the future of investments, and what are the risks, challenges that lie ahead? Let me first introduce my distinguished guests here. To my right, to my left. I have a problem with directions. Hazem Ben-Gacem is the co-CEO of InvestCorp. Art M. Benifo, right? Managing partner, Phoenix Merchant Partners. And Ramy Assaf is the co-founder and CEO of Zbooni, and Feras Jalbout, the founder and CEO also of Baraka. Gentlemen, thank you very much for coming along and for making the time. So let me start with you, Hazem. Tell me, what is the impact of this never-seen wealth transfer in the human history? How will it impact the future of investment?
Very good. Well, first, Lubna, thank you for having us all here. And thank you all for coming on day 3 afternoon to be here. So first, just to put a bit of numbers to it. There is 70 to 80 trillion of wealth which is going to be transferred over the next 25 years to the next generation. And that's anywhere from the US all the way to Japan. 70 to 80 trillion, okay, worth of wealth. And that is really unprecedented in human mankind. You don't have that kind of wealth transfer over the last, in a relatively short time frame of 25 years. So who is this new generation who is going to inherit this 70 to 80 trillion worth of capital? They have relative characteristics. First of all, they are significantly more comfortable with risk than their previous generation. Comfort with risk means you're going to be investing in a different asset class. Perhaps less cash, perhaps less real estate, perhaps more venture capital and other asset classes. Second of all, this generation is well-read. When you are well-read, or at least when you think you are well-read, you start to make your own decisions. So this new generation will likely be more likely to deploy capital themselves directly, as opposed to passing it all on to asset managers. And third of all is, this generation is one which have very strong views on views and principles on certain topics, whether it's ESG topics, whether it's inequality topics, whatever these topics are. And most likely, these topics will be very important in challenging investment decisions through the next decade or so. So to summarize, 80 trillion of capital going in the hands of individuals who are more confident, more aggressive in taking risk, and have very strong views about certain topics which they will put their dollars to work in.
Okay. Or do you agree?
I agree to some extent. I agree definitely there's a huge transfer of wealth that's going to happen. I think that people will choose how they access services, how they pay for services, how they use financial services very differently in the next couple of decades. I also agree to some extent on risk. However, I probably will quote from Mike Tyson, everyone's got a plan till they get punched in the nose. I think that what we're seeing in the environment currently with the markets has surprised a lot of young investors who thought it was very easy over the last 3 to 5 years, my 2 sons included. It's going through this risk acceptance, and the the compliance around that, the education around that. And I think Hassan said something very important. When you think you understand. And I think that I always joke and say those of us with gray hair, they're not highlights, right? You make a lot of mistakes, you learn through mistakes. We're human beings, you learn to walk by falling over. And I think that we've all gone through that early period when we're very young, where we want to change the world. Unfortunately, we all grow up, right? And life catches up with us. And so the speed of that evolution and how that's done, yes, there will be more independent and individual choices, but I don't think that pushes away the institutions or the need for rails to protect people and their choices.
Okay, let me bring you Feras in. So do you think young people, risk takers, well-read, or the people who think that they know what they're doing will take over or not?
I think it's inevitable to some extent that this next generation will take over. I mean, I think the thing that we can all agree on is that the wealth transfer is going to happen. So, I mean, depending on whether you think it's going to happen on the Gen X level or the Gen Z level, it will, wealth will change hands. Now, do I think younger people are inherently more willing to take risk? I don't think so. I don't think necessarily that's the case. I think that they are more willing to try different things, and they are open to different asset classes that maybe my generation or my parents' generation were not open to. So if you look at things like NFTs and crypto, young people may not necessarily assume the same level of risk for these things. Now, obviously, we're going through a moment in time where obviously there was asset bubbles and so on, but if you think about what the next 10, 15, 20 years brings, I think this next generation will usher in a whole new set of technologies and a whole new set of investments. Whether it's in the things that I mentioned or things like art, anything that can be fractionalized now. So I think that it's less about taking more risk, it's more about investing in a wider set of asset classes that were not available to previous generations before. So.
Ramy, you tried so many things before Zbooni. You lost money. You lost people's money. So what do you think?
That's not true, by the way. I didn't.
Why? No, it is
Not
true.
yet. But what I think is it's an interesting experiment, and what we've seen over the last 5 years is actually transformational. So something like a Baraka or a Robinhood, and suddenly you have more than 20 million people on a grid where they have access to financial markets, access to invest. That democratization of access has changed the game in many ways, and it's not the fundamentals of a company that dictate whether it's going to get investment or not. It's more of a popularity contest, and younger people have. And you take an example of GameStop, for instance, where it doesn't really matter what the company is doing. It's we all decided that this is what we want to invest in, and so this is some of the dangers or some of the awkwardness, you could say, of that intergenerational access.
With a recession right around the corner, I'm sure that investors are writing fewer, less checks. What is hot and not so hot in fintech now, Ramy?
So I think what we've seen over the last 6 months or so is a changing of the perception as to what's investable. And I think that there's from YC there's a belief in two types of companies: one that's default dead, and one that's default alive. Meaning the default dead company, if it does not receive any further funding, it doesn't have a window to reach break even or profitability. Hence, it's default dead. It requires sustenance from third-party money. Default alive. I think that type of scenario today is going to be a lot harder to fund, and that's no longer hot. There's no more such thing as vanity metrics that dictate whether a company is going to get investment or not. It comes more down to fundamentals and P&L and balance sheet. Mm-hmm. And I think companies that have stayed the course and stayed disciplined over the last few years and focused on their customers and focused on their bottom line and delivering value that you can actually count, that's what's hot right now.
Mm-hmm. The hype around fintech alludes to its potential to lower costs, increase process efficiencies, and facilitate access to financial products and markets. Did it delivered? FinTech delivered what promised? Art?
So my experience in fintech is obviously from financing and investing in growth companies in the US, primarily SaaS, and then into fintech of recent. I would say, and the topic of this, this panel is the golden age of fintech. I think that we've had the golden age of fintech. Alluding to some of the things Ramy is saying, where everything that had the name fintech on was successful. I mean, WeWork was a fintech company, right? And I think that I don't think it has delivered the expectations that people talked about 10 to 15 years ago in the US. And that's primarily because the incumbents are hard to move. They have no desire to necessarily change. They have a very loud voice, both with the regulatory bodies as well as the government. And the regulation, all that happens is something new. It's safer not to do anything. And so I would say that, in headcount, the only part of finance that has grown has been compliance functions. And so, so has fintech delivered? Everyone looks at a Stripe or a PayPal. There have been deliveries in payments. But in the rest of the thing, I think it's still a long way to go. And just to end my comment, Charlie Scharf from Wells Fargo said this morning that the war is just beginning. So you know that the big institutions are going to have a say in the matter. So I'm not sure. I'm not sure it delivered, but it wasn't for want of trying.
Mm-hmm. Building on what Art said, how do you evaluate fintech now compared to 10 years ago? So is the golden age really behind this?
Yeah. So, although I fully agree with Art around fintech needs to evolve hand in hand with the regulatory environment, which means regulators. It just gotta go hand in hand. There's no two around that. And if the regulatory ecosystem is slow, then that will hinder the evolution of the fintech world. But are we, as the golden age, behind us? I like to think that the future is a big part of the future of fintech is in the future. Now, if you compare the last 10 years to, let's say, the next 10 years, the last 10 years were the golden years of free credit, literally. I don't think it's going to happen in our professional lifetime, where you can borrow at 0, 1%, and maybe 2% if you're unlucky. Okay, so I think those days of free credit are going to be difficult to replicate in at least our professional lifetime. Fintech have survived, particularly many of the models which rely on credit and what have you, have really thrived in the zero interest rate environment.
So your appetite around fintech changed?
Fintech continues to be attractive. However, fintech companies will have to be more innovative and more creative to rise above the noise. The second thing which is very important is, and this is not only applies to fintech, it applies to most tech businesses or startups in general, they thrive in a liquid or robust public market, capital markets environment. The IPO market, the fact that the IPO market is perhaps shut for a while or capital markets are going to be challenged for some period of time, that's going to put a lot of pressure on younger businesses on financings, on access to capital, and perhaps maybe that is a healthy kind of a healthy environment in the next 10 years with a lower valuation environment and maybe a more selective environment of players in the fintech space.
Feras, what do you think? Probably we can say that 2021 has been unmatched when it comes to fintech innovation. Do you think that the amount of money and investment that has been put into that space the last 10 years will continue into the next 10 years?
So I want to answer that, but I just want to touch on the point that my other panelists here mentioned. I think we'd be remiss to say that fintech hasn't delivered. I think fintech players play on the periphery, right? So they play in that empty space where there's ambiguous regulation for the most part, and then grow as they scale and get more licenses. But we've seen tremendous companies rise in the last 10 years, right? The Stripes of the world and all the investing apps. And so I think there's a lot of good that's come from fintech. A lot more people are investing, a lot more merchants are online because of fintech. Creates a lot of opportunity. And while I don't necessarily think, to your question now, I don't think that we'll see the same level of investment. We will see continued investment. There will be greater opportunities for fintechs to converge and grow in their space horizontally or vertically. So I think that we'll see less dollars, but more opportunity for strong fintechs.
Ramy, thing that we were discussing, Visa did 5.6 billion in free cash flow. That is on 7.8 billion in revenue. We're talking about 72% free cash flow margin. Where is crypto? It doesn't look like crypto actually displaced the popularity of Visa and MasterCard.
That's absolutely right. I mean, there was suspicion for a while that Visa and MasterCard were somehow going to disintegrate because of crypto, and they would no longer be necessary. And I think that's the results are in, and that's not the case. And I think for the most part, crypto has proven to be largely still a speculative market rather than how people actually want to spend their money. And if you do want to get into crypto, guess how you're doing it? You're doing it mostly through Visa and MasterCard, and if you want to get it back out as fiat. So I think they stand to benefit the most from all of this influx of capital that Hazem mentioned earlier. And I think that time will tell, okay, if crypto actually becomes somehow more of a norm in terms of how people pay for things, and I think that's what matters. But even if that's the case, how disruptive is that? I mean, we might save a few bips on a transaction here or there, but it might make sending money back home easier, things like that. But clearly, the rumors of Visa and MasterCard's demise have been greatly exaggerated.
Hazem, let me move to something else. What do you think the next generation of fintech companies will look like? Where are the opportunities in fintech now? Where we invest? Where we put your money?
So first, I think fintech will continue to be, I mean, let's put it, forget about fintech, banking. It is by far the world's most inefficient sector. I mean, a bank is nothing more than, put it simply, it's an institution where you can move money and store money. And the fact that someone tells you need
Hazem, we have bankers in the audience.
the fact that they say you need 3 days for a wire transfer, that is by far the world's biggest robbery ever. Okay, so, so I think let's put that, and inefficiencies, that's what technology in a way is solved. It addresses inefficiencies. So in a way that is exciting. Fintech we have invested a fair bit in the fintech space, not lately, and not because of lack of appetite, but valuations were just so frothy, and perhaps the market cooling is quite attractive. Fintech, there's a lot of volume-driven fintech businesses, like for example, payment processors. If you remember, I lost count how many payment processor startups are out there, and after a while, you're just competing on margin, which is really quite difficult to sustain. Value players, I think, will be successful. I give a lot of credit, not just for companies like Klarna and PayPal and what have you, but even Visa and credit cards, because in a way they have set a certain blueprint of what the end consumer wants, and now it's really up to these talented, kind of executives and entrepreneurs to kind of look at that blueprint and see how can we make it exciting. So value-based fintech investing is perhaps the next forum, solving, at least for me, the two very basic questions which every single one of us want from our banking institutions. How can I move money and store money in a safe way? And I hope blockchain will play a very important part in that transition of fintech in the years to come.
I have a question to all of you, and I'm going to start with you, Feras. What is the biggest risk that lies ahead for fintech players?
It's a good question. Over-regulation to some extent. It's almost a risk and an opportunity. I mean, if you're regulated, obviously, it's a moat, a barrier to entry for some other players. But to some extent, not being able to kind of experiment in this space is challenging. You have to be able to have some flexibility. So I think that's always challenging as a
over-regulating. Ramy.
I think what we see as the biggest risk is the banks themselves. and their lack of willingness to take any sort of there's very little appetite from a bank that's highly profitable and has very established ways of doing things to all of a sudden join you in taking new risk. We can only be as disruptive as the banks allow us to be, because those are our partners. If we grow too fast, it spooks them. They wonder why. Where's all this volume coming from? Hold on, let's go back and do a compliance check. And we're just constantly being stifled by the banks themselves. So I think that's a problem that persists.
Art.
Yeah, I would echo what they both said. I do think there's an opportunity with it, though, and it's something that Hazem was sort of referring to. I do think that going forward, if the banks can partner and you see more joint ventures come forward, you will have more successful fintech businesses that will also last for a long time. Now, the problem is also that banks change their minds often. So you don't want to feed the golden egg to the dumb elephant, right? Because what will happen then is you will crush businesses and destroy creativity. And I think that a lot of banks have tried to do these sort of tech incubation ideas and sort of own a piece of it. But typically the entrepreneur does not want to work for a large institution. They want to be by themselves. Mm-hmm. And I think that's where the sort of rubber meets the road. So I see the risk about as regards compliance and regulation, but also the willingness and openness to admit the challenges of current banking, the legacy systems, the poor infrastructure. I mean, I remember when I was fairly senior in the bank, we had 900 people keeping market data. Now, everybody sends people holiday cards. There's no secret about your address on an institutional basis, but we had 900 people maintaining that. Mm-hmm. And nobody was willing to have one place to just do it. Mm-hmm. So I do think that it's going to be partly ego and regulation, and then the desire to actually change. Mm-hmm. It's not the ability.
Yep. Hazem.
I would say it's government weaponization of banking infrastructure. Mm-hmm. All fintech and banks are regulated, and then when a regulator says, oh, you can't do business in this country or that country or what have you, sometimes for legitimate reasons, but in many times for something that has nothing to do with business. It's just a government policy for or against a certain other region in the world. Fintech or banking should not be one of the weapons or the tools used in whatever foreign transaction. I think, to me, that concerns me the most.
Yeah, well, it's used. I have two more questions. Crypto or blockchain? Where will you invest?
Oh, definitely blockchain.
Definitely blockchain.
Ramy?
Neither.
Okay, good answer. Feras?
Blockchain.
Blockchain. What is the best innovation in fintech ever, Hazem?
Well, the fact now that credit cards are on your mobile phone, that I can use the excuse that my battery is dead. I get my friends to pay for my dinner.
Good.
So.
You know, it's funny. You could do that in Japan in the 90s. I don't know if everyone remembers that in a taxi cab. I think that the best fintech invention has been the ETF, because someone like BlackRock manages $1 trillion of European fixed income, and they have 3 people to manage that every day. 3 people run $1 trillion. That there's nothing better than that. And also with an ETF, you can deal with the fractional share issue. You can deal with the choice of the specificity of what you invest in. But it's not quite as sexy, I guess, as the other fintech applications.
Ramy?
Well, I think what we do at Zbooni is quite exciting because it's not just about digitizing a transaction.
It's the best one for you,
for
of
me,
course.
You see, when the long tail, let's take a market like Egypt, for example, which is still 70% cash based, and you help a small business get on the grid, and now they can take digital payments. Yeah. It's not just about helping them get that transaction. Now there's structured data. They know who their customers are. They know what they bought. They know when they bought it. They can now be participants in the VAT economy, and they can remarket, and they can do a number of things. So it's more about the comprehensive digitization rather than simply that transaction.
Okay. Feras, let me think. Let me take a thing.
Take
Baraka.
Baraka, that is the best. No. I have to take a page out of Art's book here, where I think it's kind of the securitization and the fractionalization of assets. I'm super excited about where the world is going in retail investing and the ability to invest in just about anything in the next 10 to 20 years. And that takes technology. And so giving access to people and democratizing access to all kinds of investments is a passion and an interest of ours. So I think that's the most exciting thing that's happening.
What would be the star sector going forward in investment?
Star sector in fintech?
In fintech, yes.
In fintech?
Where you
I'll
will
say
probably get the more investment than any other part of that business.
Probably the cybersecurity part of fintech. How to protect and secure whether fintech transactions, deposits, and what have you.
Okay, cybersecurity, Art.
I think Hazem's nailed it. I was going to say financial infrastructure, so probably more broadly, back offices. I talk about that quite often for PE investment. If you're able to do roll-ups in the back office and you're able to offer that more broadly, you probably make 2 to 3 times your money on it. But what's interesting, it'll give you a current yield of about 15% because of the fees associated with it. So I think that if you can do more broadly with KYC, dealing with cybersecurity, dealing with processing, payments, it should be the back office. I know people get more interested in the investing side of it and the choices, but you got to clear, settle, and you got to be able to report.
So
And banks don't do that well. Insurance doesn't do that well today.
okay, Ramy.
I mean, one of the challenges that remains to be solved is remittance, settlements. It was talked about earlier. Why does it take 3 days to do a SWIFT transaction?
So investment and settlements, probably apps.
Yeah, domestic and international.
Sorry.
Domestic and international.
Okay.
Bitcoin.
He said neither Bitcoin or blockchain, and I should have asked you what then.
I mean, no. I mean, I'm happy to participate in blockchain. I don't know if I'd invest in it until I see proof in the pudding. We haven't seen it. I mean, have we collectively felt the impact of blockchain in our daily lives to this moment? No. So I don't know if I'm going to be investing in that just yet, but if there's some evidence that it's solving.
But Ramy, you would agree that a blockchain is a necessary step. So I understand your point. Just take in the U.S., right? Title insurance. You buy a house. Someone's got to process title insurance. Blockchain will solve that very quickly. You go from a 10-week process in buying your home to probably an hour. The ip is all those title insurance companies all around the United States are going to be lobbying their congressional representative not to let you do it. But you would agree, I would assume, that the right thing to do is to get a service that shortens the process for consumers in buying their homes.
Sure.
Feras.
This is a bit boring, but I think digital identity.
General identity.
Digital identity.
Digital identity.
Yeah, I think this is an interesting space, and there's a lot of room for improvement in this space. But I think if we can nail this, then I think it really scales and has multiple kinds of input points.
Okay, so invest in cybersecurity, financial infrastructure, digital identity, and be very careful when it comes to crypto and blockchain, unless it's a very sound opportunity. Thank you very much, gentlemen, for your time.
Thank you.
I really enjoyed the chat. I hope you enjoyed it too.